All right. Welcome back, everyone. This is Bob Maurer. It is Monday, the 9th of September, 9/9, at around 10:30 in the morning. And I want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads, and then also I have one new one to introduce. So let's dive into the portal and see what's cooking here. I uploaded a short time ago this morning the most current PDF version of the strategy sheet. So let's get to that. Down into the portal. It'll be right here for this date 9/9 for the week of September 8th. And here we have it. Okay, here's what we are working with. So top four rows, bear spreads, 314 live cattle, 315 natty gas. We'll look at those. 318 flat. This one timed out end of last week. We'll see how that ended up. And then 319 beer spread soy meal flat, targets reached. So we'll see how that one evolved. And then a new one, bottom row here, number 320. It's a bull spread in blue. Dece March corn futures, and we'll go over a quick review of that one. All right, so those are what we're working with here today during this segment. Let's hop over to the charts, take them one by one. All right, first of all, let's talk about the ones that are off the board. So this is the wheat strategy number 318. As you can see, it was revised about a week ago, and I had pulled the targets up, and I think I dropped the stop. I can't remember exactly about that one, but definitely pulled the targets up. Turned out to be a moot point, though, because this thing timed out end of last week. The last trade date was over the weekend, and the end of the season, I mean, not last trade date, was over the weekend. So I know many got out on Friday, and the range on Friday could have given you a gain or could have given you a loss, depending on where you got out. So, I'm going to call this based on where it closed, about a break even. And the market pretty much moved sideways throughout this whole window, right? I mean, the wheat futures were, at least this wheat spread has found a pretty serious value zone. I imagine at one point it might get bumped out of it, but basically between a low of about negative 12.75 and a high of negative 10.75. That's a 2-cent range. That's worth $100 in terms of the tick value there. So not a whole big range at all, and we basically got stuck in the middle of it, but didn't necessarily hurt or gain too bad. Pretty much a sideways endeavor. So this one's off the board, and like I said, depending on where you got out, could have been a scratch, could have been a modest loss, could have been a gainer, actually. So this one just kind of drifted sideways. And I'll take a small loss or a scratch over a loss, a big loss, any day. So no harm, no foul on this particular strategy. Didn't have a whole lot of movement once we got in. So that's number 318. It is now off our board. And then soy meal. So this actually has, this is number 319, spread soy meal. This one has worked out pretty darn good relative to my interpretation of its back data. So had a rally, and at least the more aggressive average in traders got in at level 1, -8. Okay, I canceled level 2. I think it was +5 if I remember correctly. And then the market basically filled the -8 level and just has drifted lower for a number of days and actually pushed through the second target the back half of last week. So -41 now. We still have a couple more days left. This thing ends 9/11, which is Wednesday. And if you are still bearish, more power to you. But for all intents and practical purposes, this thing has reached a couple targets. So I'm going to call this one a gainer. Should have been a positive development in terms of profit for most out there if you played it the way I have it here. And we're going to go off the board as a winner on this one. If you want to stick with it for the last couple days, more power to you. Maybe it'll get to negative 56 if there's some catalyst that comes along and really pushes it down, or maybe it just makes new lows, which would be fine too. In either case, I would recommend. I had originally dropped the stop down to -8 to make it break even for the level 1 traders there who got in. I would definitely tighten that up to, say, -22, just above these moving averages, or perhaps, if you really want to squeeze it, maybe -27, something like that. So really try to lock in the gains, all right? It's been a nice trade. All right, so that's number 319. We should be flat. Should have had some level of realized gains on this one. Next one we will do is one of the ongoing spreads here, which is live cattle. So I wasn't too sure about this one in as much as what's going to happen from this day going forward. All right, the data is giving me mixed signals in this environment, or at this time, shall I say. And we're about midway through this seasonal window, so it's a long seasonal window. I was mostly confident up here, which is why anybody who's still in this one who had not elected to keep their stop working is still in. I was very confident, to the extent anybody can be confident in the futures markets with all the variables, that this could be a false breakout to the upside here, and that worked out well this time, right? No guarantees it'll happen next time, but this time. So we're still on board. The market's basically found its value zone of, say, -190 up to this -122. That's a 70-point range. That's a $280 value. And I walked this forward last week, the end of last week, and the data does not look phenomenal in terms of the probabilities of this thing, breaking through the end of the window here on October 12th, which is about, roughly about a month away. So I would not blame anybody if you wanted to go ahead and liquidate. Now, luckily, this morning, it did hit that first revised target of -180. So more conservative traders who raised their stops from the original levels should be out with some level of realized gain there, okay? And the next level would be -205, but -205 is below this white line. This white line is the 200-day moving average, which markets, in my experience, have a tendency, not a 100% probability of reacting from. And it already did that once here last week or so, early part of last week, or maybe that might have been the end of the week before. And now we're getting towards that again. Now, if it does break that 200, I think things look pretty solid for a push down, maybe towards these lows of -220. But nonetheless, our target 2 down there at -205 is sitting there. All right, so I am going to call this one a gainer because it did hit the revised target. If anybody is sticking with it to push it down to new lows and maybe get that -205 and would like to strategize, feel free to reach out to me. This one's going to go off the board as a gainer. It's been a interesting trade, right? Been a kind of wild ride, but we'll take this relatively modest gain rather than what would have been a bigger loss up here. All right, and notice too, I had put this window a couple weeks ago in that this seemed to be a sweet zone, a sweet spot in this seasonal strategy where 4 times it had made its low somewhere in that area and during that window of about 4 days. So it's kind of interesting that we're getting towards that and it's pushing down there. So maybe that kind of helps out anybody who wants to stay short. All right, so that is strategy number 314, bear spread live cattle, going off with some level of realized gain for those who did not get stopped out earlier. All right, and then we've got natty gas. This is strategy number 315. It's been revised once. We've got the revised targets here at -292 and -304. Okay, the market's choppy really last week and a half or two, been stuck between this -292 and -280. That's a 12-point range. That's a $120 range in tick value, and we're looking for this thing to break on down. Don't know. I mean, we had a big bar up here on the 3rd of September and had a bit of follow through. Now we got a big bar to the downside today. Maybe the same thing happens where you just get a bit of follow through, but we got our targets here at negative 292, negative 304. Neither one have been filled. Looks like both entry levels should be filled. So if you do play the trade that way, then your entry point should be around negative 277, and clearly looking at some level of unrealized gain at the moment. All right, seeing that we're sitting at about negative 290 right now. So we just need the market to grind a little bit lower, just like 3 ticks, 4 ticks. Guarantee us a fill. Get down here at negative 293, and at least we could lock in all or part of the profits on that first target, and then maybe it'll stretch on down to negative 304 for those who are multi-lot traders, or you're a little more aggressive with your one lot and you just want to trail a stop. Either way, it's fine with me. Trader's prerogative all the time. All right, so that's 315 nat gas bear spread, sitting in good territory, everything going according to plan. I'm thinking I might drop that stop down sooner than later. We'll see how it trades over the next couple of days. Lastly but not leastly, we've got a new one to introduce. I did not put the margin requirement here. It's on the sheet. I want to say it's 330, but don't quote me. Take a look at that. Strategy number 320. It's a bull spread in corn. Long December, short March, so we're in the same marketing year. Risk reward, risking about $100 if you're the more conservative level 2 entry trader to make either 175 or 237-ish, and then more aggressive average in traders risking 275 per 2 lot that you average into to either make the same or maybe $400 if it gets to target 2. We are looking to buy this on a bit of a dip from where it started. The benchmark's negative 18.5. The seasonal window goes between 9.5 and 11.1. So that's about 50 some odd days, if I remember right. And we're looking to pick it up at negative 19.5 for the more aggressive average in traders, and then negative 21 for more conservative entry. And then our stop is negative 23. Targets up top. You see them where they're at there. We are going counter trend. So this market is broken from this high back mid-June of negative 10 to this low late August of negative 19.75. So that's a 10 range. It's a $500 move to the downside. We want this thing to either come to a retest of this low or break into new lows and then hold and then move higher. So this is counter trend. All right, so just give a brief introduction. I'll do a deeper dive into this particular strategy to give you the backstory on this one as soon as I can get to it. So that's strategy number 320, bull spread in corn. All right, so the wheat ended up about a scratch. The soy meal ended up a winner. The live cattle just hit target 1, so that's a gainer that just hit today. And then we've got nat gas, which is getting close to its target. And then we've got the new one that I introduced in corn. All right. I think that brings everything up to speed. As you know, if you have any questions, comments, anything of interest, I will make myself available. So feel free to call, text, email, whatever you like to do, and I'll be here for you. Other than that, I'm going to leave it there. And thanks so much for watching.